Welcome to Ask the Expert, a daily series from 8:30 a.m. to 9 a.m. to help small businesses. Ask any questions in the comments or at hashtag QBATE on Twitter. If you need any advice or any more advice, join the official Intuit QuickBooks SMB community group on Facebook. Accountants and business experts are on hand 24/7. So I'm Gary Stewart, a serial entrepreneur. I've been a lawyer, a business school professor, and a corporate executive. But of all of these things, I think that being an entrepreneur, for me at least, has been by far the best. My background, as you can probably tell from my accent, is that I'm from the US. I grew up in New York, in the Bronx. Eventually, I went to Yale College and then to Yale Law School, and I became a corporate lawyer. I worked in New York, London, and eventually Barcelona and Madrid. And I think that over the 5 or 6 years of being a lawyer, I kept thinking, it seems like the business people are having all the fun. So I think I'm going to try that for a little bit. It's at least if I do it and I fail, it's cheaper than getting an MBA. So in 2004, I started my first business, which was an offline real estate business, because back then in Spain, everything seemed to be about real estate. It seemed like to be foolproof until it wasn't. I learned there the concept of recurring monthly revenue, because a lot of times, in businesses like real estate, you can't really guarantee the income that you're going to get the next month. So then I decided to do something that was a bit more digital. And in 2005, I raised, or I would eventually raise, about $4 million for an online property search engine, very similar to Zoopla, but we were focused on Spain and Latin America. We would eventually go on to exit that company by selling it to a large public listed company in Australia. But in 2010, in the midst of the global financial crisis, when people were calling Spain and the other countries in Southern Europe pigs, I decided that it might be time for me to go back to the US because I wanted to be on safer grounds. Instead, a friend convinced me to go to Madrid, where I became a business school professor at IE Business School, really focusing on entrepreneurship. In 2011, a large corporate named Telefonica, which you guys know better as O2, approached and said to me, well, we need to innovate in order to be able to compete with the Facebooks and the WhatsApps of the world that were basically eating a big chunk of their lunch. If you think about it, before you would have to pay for an SMS or a text message or whatever. And nowadays, you don't really need to pay for these things. And Facebook makes a lot of money by making sure that you don't have to pay for it. But companies like Telefonica still have to foot a big chunk of that bill. So trying to figure out how to innovate with smaller companies was a big part of what large telcos and large corporates in general have been trying to do over the last 5 to 10 years. So I spent 3 years in Madrid doing that, first running this in Spain. And then I spent the last 5 years from 2014 to 2019 doing it in London. Over the course of those years, we ended up investing in about 185 companies, usually up to about $150,000. Our companies would eventually go on to raise about $267 million in total. And by the time I left in 2019, they were worth more than $1 billion. Part of what I really started to realize as I came to understand the UK was that a lot of things seem to be focused on central London. So we extended the program to 6 cities in the UK, cities like Manchester, Oldham, Cheltenham, Haringey, Edinburgh, Birmingham, I think are the main ones. And we also did it by working with large partners and governments like Merck, Novartis, the Cabinet Office, the Oldham Council, the Haringey Council, DCMS, Hyundai, et cetera, to try and really bring entrepreneurship and entrepreneurial access to these different communities. In 2019, I kind of finally left Telefonica after 8 years. I had never expected to spend that long in a large corporate, learned a lot about corporate politics, and decided maybe this isn't really for me. And so in 2019, I left to kind of focus on what really is my passion project, which is The Nest. All of those years of seeing all of the people who were being left behind and excluded from access to entrepreneurial education or entrepreneurial information and access to capital, I decided that that's a problem that I would really like to spend the next 10 to 15 years of my life trying to solve. And you can think about this if you look at one simple stat or a few simple stats. Y Combinator, which is by far the biggest and most successful accelerator in the world, they have been the ones that have incubated companies like Airbnb and Dropbox and Stripe, amongst others. I was listening to a chat yesterday with the current president, and he said, they've invested over the last 15 years in 2,500 companies. They have a 1.8% acceptance rate. The companies that they've invested in, like Airbnb and Dropbox, have gone on to make billions for the people who've invested in them. But when you think about it, that's really only a very small percentage of the people who aspire to create companies every year. So looking at their 1.8% acceptance rate, that would mean that 98% or 98.2% to be precise of the people who apply to them will never get any sort of meaningful help, even though Y Combinator, to its credit, does have something called a startup school. But getting the kind of real access to support, that's something that most people are going to be denied. And 2,500 companies over 15 years amounts to about 150 companies per year maximum that are really getting any sort of real support. So what we're trying to do is to use technology to be able to democratize this sort of world-class entrepreneurial education to anybody anywhere in the world, as long as they have a mobile phone. If you've ever seen Masterclass, it's very similar to Masterclass, but we're focusing very specifically on founders. And we have three main pillars. The first is to democratize and curate information from people who have been there and done that. In a lot of other disciplines, whether it's law or medicine, you would basically have to spend a lot of time kind of learning the basic written and unwritten rules of your discipline. And then you'd probably have to spend a little bit of time apprenticing or following someone who's actually done it before. In a lot of business, it's kind of like you just have to jump in and take a lot of risks without necessarily having any sort of safety blanket or people to help you. And that probably isn't the optimal way of learning how to do business, I would say. And that kind of might explain the high rates of failure for a lot of businesses, especially among first-time founders. The second thing would be access to experts to answer your specific questions, because as we're doing today, and as I've seen throughout my life and even with my new startup, having people who can actually help you to answer those difficult questions in the right moment is really, really key, because it can feel very lonely and very kind of overwhelming, and having access to support, I think, is critical. And finally, and in some ways most importantly, having access to angels and venture capitalists and other sources of funding, because at the end of the day, money is the gasoline that makes your business go round. So for those of you that might be interested, please just add me on LinkedIn. Really easy to find. My name is Gary Stewart, Stewart. I'm the black guy with the picture with David Beckham, so it might be easy enough to kind of spot me among all of the other Gary Stewarts in the world. And we're launching finally in September. We've already kind of started to partner with organizations like WeWork, University of East London, Oxford Entrepreneurs, etc. And so, yeah, that's a little bit about my background. And I guess right now I'm really eager and excited to hear some of your questions to see if I can be of any use in helping you to maybe resolve some of the doubts. Because I think that now that I'm a second time entrepreneur, the first company that I founded was in 2004, the second one was in 2005, and then I had about a good 10 years where I was basically working for a university or a corporate, even though in the background I was still supporting my company that got sold in 2016. What I realized getting back on the front lines of entrepreneurship is just how difficult it is, just how lonely it is, and just how much entrepreneurs and small business owners need to support one another to kind of get through what's otherwise a very difficult journey. So maybe we can kind of get to the questions. And I see that the first question here is from Kieran, who sent a DM on Twitter. And he says, "Hi there, Gary. Has there been a fundraiser idea that you've seen that you originally thought would not work, but turned out to be a huge success?" If what you mean is kind of by fundraiser idea, it's kind of like, have I seen a startup that at the beginning I thought, wouldn't turn out to be really interesting, but at the end of the day, it turned out to be a big success? I would say probably most of them, because I think that you have to start with a presumption, at least when you kind of go to the sort of startups that we were investing in at Wayra, that the vast majority of the companies that you invest in are not going to be a success, and that there are going to be a lot of companies that are going to turn out to be successful that you had no idea that they would be successful. I think that the main question there usually is that people who really want to pursue ambitious ideas have to understand the market really, really well, because at the end of the day, it has nothing to do with how smart the investor is or how smart the entrepreneur is. It really does have to do with what the market demands and what the customers want, and whether or not the person who is supplying this idea can actually convert that idea into something that customers want and will actually pay for. So I think the key lesson is it doesn't really make a difference what I think or what kind of anybody else thinks, or even to a certain extent what you think. What really matters is that businesses should focus on making sure that they understand what their customers think, and that they end up producing products that their customers love, will be willing to kind of pay for, and hopefully even recommend to other friends. And then you can kind of create really successful businesses that can kind of scale and grow that way. Second question I see here is from Sanj from Facebook Messenger, and he says, "Good morning, Gary. As a small business, we're thinking about doing a fundraiser and are thinking now it might not be the best time due to COVID. From what you see, what do you think?" Well, yeah, I saw some numbers this morning that said that in the US, when you look year on year, the amount of money that's been invested, and they're looking only specifically at venture capital, so that might be only one proxy. It's down by about 10% in the US and about 20% in Europe. So it means that it is a bit more challenging than it would have been a year ago, but it's not impossible. And if you need money for your business, then you need money for your business, and you should kind of try to adapt to the current situations. As a matter of fact, I'm in the middle of fundraising for this new business, and I can agree that it is a bit more difficult. In the past, you would have had to kind of meet the investor in his or her office, and you would have had to go through this like very long process with lots of like face-to-face interactions. Now, basically, what I've been having to do is to send out emails to people that I don't necessarily know. If I can get a warm intro, then I try and get the warm intro. So I have a friend or someone that I know kind of make an introduction to the person that I'm trying to get access to, so that the person treats it a little bit more warmly. And then we set up a Zoom call, and I have to kind of really optimize the time that I have on Zoom and the limitations of Zoom to make sure that I put my best foot forward. But that being said, we've been able to kind of close two or three investors. One of the investors, for example, I didn't know. The second one, actually, I kind of knew, but not that well. And now we're in the process of talking to three early stage VCs that are kind of all over the world that I've never met, but we're doing it all on Zoom. Because at the end of the day, if they're good investors, they also need to kind of deploy the capital. And so you're doing them a favor to a certain extent. As long as you have a really good idea and a really good business, I think that you can still access capital. If it's a small business, it's not going the investor and venture capital route, then I know that in the US and even in the UK, there have been different mechanisms to support small businesses, mostly government backed. And then I would just pursue those as well. That would be a little bit different, though, from kind of fundraising from private investors. Third question I have here is from Declan on Twitter. He sent a direct message, and he said, "Good morning. In your opinion, how does investing in startups differ from investing in anything else, if it does at all? Or can you explain how it's similar to investing in property, for example?" So I have to say that, up until recently, I bought my flat about like 5 years ago. And I have to say, in a lot of ways, I think it's one of the best investments that I've made. But I think that in some ways, it's similar to entrepreneurship or investing in startups. In some ways, it's different. I think that it's different in the sense that for me, property, at least having a home, is still kind of something that I'm really happy that I've done, because long term, it's a very kind of safe investment. Whereas I think um, investing in startups is not a very safe investment, right? I think it's something like 85 to 95% of the funds out there that invest in startups actually never deliver a better return than if they had just left the money like in an index fund in the stock market. So the people who are investing in startups have to spend a lot of attention, really, again, trying to understand the market, really trying to figure out what's the team that's going to be able to go all the way. Because at the end of the day, what you're looking to do is you're looking to invest in the gold medal winner globally. If this were the Olympics, no one is thinking about the bronze winner. No one's thinking about the silver medalist. No one's thinking about the person who won in their country but couldn't make it to the Olympics. They're only really focusing on the gold medal winner. And it's the same thing for startups. Finding those gold medal winners in your portfolio is the key to the whole thing, because you know that even after you've filtered out the thousands of companies that come before you, it's likely only going to be one or two companies that are going to make all of the money in your portfolio, all the money back, so that you can kind of go back to your investors and say, "Hey, we've done a good job. Can you give us more money as a venture capital fund or as some other form of investment fund?" Whereas I think in property, you don't have quite that risk profile. So I think that in entrepreneurship, it's high risk, high reward. That's why they call it venture capital, or adventure capital as it was called originally. Whereas in other forms of investing like property, it's a much safer asset class. And so it's just kind of different. You might not make as much money if it goes well, but you're probably not going to lose money either. And, one example is I saw that if you had invested, I think it was like $25,000 in Uber at the very beginning, by the time that they did their IPO, you would have made like somewhere between 75 and $124 million. I can't remember all of the numbers, but a huge multiple. And that's kind of the way that people are trying to play the venture game, at least in the US and now increasingly in Europe as well. We now have a question from Victoria, and she says, "Do you feel that the tech space is at its pinnacle right now, or do you think it has even more potential? And where do you think that the potential lies?" So I think, tech broadly defined is not at its pinnacle. I think that if you mean like software companies, and I think that sometimes people, when they talk about tech, they're talking about software. Um, you know, it's who knows, right? I think that rather than focusing on the technology, the key is to focus on the fact that there will always be problems that people need to solve, and newer technologies will simply make it easier to solve those problems. So I was listening to a fireside chat recently with Nicholas Zenstrom, who is the founder of Skype, and they did pretty well with Skype. I think he made a billion or something from it. And someone was asking him, why are we doing this chat on Zoom as opposed to Skype? And he's like, well, the technology, when I created uh, Skype, the technologies that we had available to us were X. Fast forward 10, 15 years later, the technologies on which Zoom is based are completely different. And that means that they can operate a lot more in a lot more agile way for the technology that we have in 2020, as opposed to the technology that he would have had in 2010 or whenever it was that they started Skype, maybe 2005. So I think that that's the point. It's not necessarily that technology kind of comes and then it kind of stops. The point is that technology continues to improve. And as it improves, products that were really revolutionary 10 years ago become kind of outdated. And then all of a sudden, clever entrepreneurs will use the new technologies to figure out how they can kind of disrupt those old technologies. And technology, I'm assuming, will continue to go forward as long as we have clever people that are thinking about how to solve problems that aren't being solved adequately enough in the current situation. And I think the second thing I would say there is it's also really important to expand our definition of what technology is. Because if you look, for example, to people trying to answer questions about our current moment, there are a lot of biotech companies right now that are raising billions of dollars to kind of try and find the cure to COVID. Well, that's technology as well. It's just not kind of software technology, it's biotechnology. And like that, there are going to be lots of other forms of technology that are trying to solve real problems that people have as quickly as possible. And where do I think that the biggest potential lies right now? Well, anecdotally, where people are saying that they're really focusing are on things like e-learning or ed tech. Why is that? Because since we're kind of socially distanced, people are really worried about their kids falling behind because now they can't really have these face-to-face interactions. They can't really go to these schools offline. So people who can kind of offer solutions that will help parents to make sure that their kids still have as good a chance in life as they would have had, you know, 6 months ago or a year ago, that tends to be one of the big human needs that people are trying to solve for right now. Uh, Telemedicine is another big thing. People have seen the importance of medicine and the fact that maybe people are going to the hospital too much, and that was kind of clogging up hospital systems, or maybe that people are more concerned about their health right now. I don't know. But the point is, that's another area where people are saying that it's really interesting to kind of focus. Areas that are kind of not as interesting right now would be stuff like travel, because no one really wants to travel right now. So kind of travel companies or travel tech companies that maybe a year ago were flying high are now finding it a bit more difficult. So it kind of goes back to what I said before is I would focus a little bit less on the tech per se, and focus a bit more on the market and understanding what are the problems that exist in the market that technology can help you to solve for, and then figuring out what's the best technology to try and solve for that problem. Film from Facebook Messenger says, "Morning, Gary. I'm wanting to set myself up with multiple income streams, with some of that income coming from investing in startups in the future. Are there any tips from your experience that I should be looking out for when investing?" I think that one of the easiest ways to kind of begin to invest is to see if you can co-invest with people who've been there and done it before. So a lot of funds, especially from first-time founders, will kind of only they'll say that they don't want to lead around; they only want to follow in around. And if they can follow in around with investors that have a really good track record of success, then maybe that's the way to kind of ease your way into it. So I would say that would be the kind of the first tip. Don't try and invest by yourself. Try and invest with people who have been there and done it before and have some track record of success, and then see if they would be willing to let you get in on the round. And then after you kind of get enough of a feel for how the game is played, then maybe you can try and do it a bit more aggressively on your own. But still, I think co-investing is a good way to kind of mitigate the risk, just like some people invest in index funds. Lori from Twitter on DM says, "Our business is dealing with online educational services that we distribute to students nationwide. We've never looked for funding before. Do you think it's a good idea for all businesses to do that, or do you think that there are certain criteria for businesses seeking funding?" To the extent that this means that in kind of venture capital or angel funding that kind of is geared towards venture capital eventually, the key is to kind of understand what a venture-backed business requires and how venture works. And essentially, the key there is to understand that they're not investing their own money, they're investing money from other people. And they need to give those people back the money in 7 to 10 years. And they need to give those people back the money with usually at least a 3x return. Because again, that if the people had left their money in the stock market, that's probably what they would kind of be moving towards. So you want to prove for venture capital that there's a benefit to taking that additional risk, right? And so I think as long as you understand that, then you understand that investors in that kind of class have certain limitations. They can only bet on companies that they think would be able to pay back the entire fund. So if they have a fund that's worth, like, let's say 100 million, that means that they need to be able to return 300 million, and they have to look for companies that when they sell their stake will be able to give them back 300 million. So you have to kind of go from the beginning with a very ambitious idea. Don't think that it's enough if you're making like $1 million or $2 million a year. For you, that's a really wonderful thing. And some people would call that a lifestyle business. But if you're going to go for venture or anything like that, you have to create venture backable businesses, which are the ones that are going to be these outsized returns that are going to allow the fund managers to kind of continue in their careers after the end of their first fund cycle. Someone said, Omar from Facebook Messenger says, hi, Gary. Wow, what a decorated career you've had. Oh, thank you. It's been really nice hearing from you this morning. Do you miss teaching like you did in business school? Probably not, if I'm honest, because I feel like when I kind of started working at Wayra, I was able to kind of teach every day, but in a kind of practical sense and not in a kind of formal sense. I think that the big difference between teaching in the business school and kind of supporting entrepreneurs at Wayra, or even kind of talking to entrepreneurs now as a mentor, is that you're talking to people who have real skin in the game and who are doing it for real, as opposed to people who are doing it theoretically. And that makes it a lot more fun. It's not to say that I wouldn't ever go back to teaching, because now I guess after 15 years, I feel like there's some lessons that I could share even with people who haven't been in, who aren't going to set up their businesses. But there is something a lot more fun about helping someone who is actually has skin in the game, and that you can help to make that journey a little bit better. I think it's a bit more rewarding, at least for me. Nikolai from Twitter sent a DM saying, hello, Gary. For people who are thinking about starting up a business on their own, they may see the obstacles and may decide to do something else. Well, yeah, I think this is a question, but I would say, yeah, of course. First thing you have to do when you're starting is you have to figure out what your risk profile is. And you have to remember that, like, even though on TV it looks like Facebook became Facebook overnight, there probably were like 5 to 10 years before Facebook became Facebook, before everyone kind of knew it. And most of the companies, I mean, I think Facebook might have been a little bit quicker in terms of its trajectory, but most companies take a long time. So I think maybe Amazon is a better example. Jeff Bezos was probably kind of like slaving away at Amazon for like 10 to 15 years before it became this huge thing. The folks at Netflix, same story. They started off kind of mailing DVDs and stuff like that before they came onto the streaming model. So you have to kind of make sure that you're willing to put up with all of the BS, all of the ups and downs, all of the craziness that goes into entrepreneurship. You need to kind of make sure that you're ready for that, and that you're ready to do that not for like a year or two, but presumably for like 5 to 10 to 15 years to really see this idea through. And if you are going to seek venture capital, that's what they're going to be looking for in you as well. They're going to want to look for people who are passionate and almost obsessed about solving this particular problem. Because if you're not passionate and obsessed about solving the problem, the likelihood that you're going to make it all the way through is going to be very, very, difficult. So yeah, make sure that this is something that you really care enough about that you want to spend the next 10 years at least of your life trying to figure it out. Mina from Facebook Messenger says, morning, Gary. How does the nest work? How do I get involved? Well, Mina, thank you very much for asking the question. Easiest way is to send me an email, GaryStew, GaryStew @gmail.com, and then I'll happily send you our private beta, as well as some information about kind of what we're doing. And for anyone else that kind of wants to understand or kind of wants to be a beta tester, which I would actually really appreciate, because we're now at that phase where, again, going back to what I said before, I had certain hypotheses about what the user would want. Now I actually need the users to tell me what he or she wants so that we can kind of create a better product. I think if you look, for example, to YouTube, I was once at this chat with Chad Hurley, who was one of the co-founders. And what he said is, because he was a kind of creative person, he created YouTube as a kind of video platform for creative folk, graphic designers, et cetera, et cetera. Over time, they realized that that wasn't generating a sufficient community. So, but what was really popular was apparently these videos with dancing cats, which no one would have ever hypothesized would be kind of like what would be the killer feature of YouTube or the killer kind of user proposition. So I think, again, you just trust your user and kind of figure out what the user wants. And so anyone who would kind of like to help us on that journey, please just send me an email, GaryStew, GaryStew at gmail.com, and I'll happily send you the beta tester, the beta, and then I'd happily be excited to get like any feedback that you might be willing to share about how we can make the product better. What problems are we solving for you? What problems are we not solving? How can we do this better so that I understand that? Rosemary from Twitter sends a DM saying, "Hi Gary, such an interesting background you have. If you don't mind sharing, do you have any regrets in business?" To the extent that I have any regrets, not really, because I think that everything has kind of like helped me to figure out like what I like and what I don't like, and so it's all been really, really instructive. I think that now being able to do the nest is only because I did 8 years at a corporate, have some background in law, created 2 companies and sold one of them. The first one failed, and then taught at a business school, so I understand a little bit about the education space. There have been highs and lows in each of those different adventures, but some of them have made me prepared to do what I'm doing now. So I don't think I have any regrets. Usually what I have are just lessons learned about what I would do differently next time, or maybe things, that I should avoid doing again in the future. Um, Soman from Facebook Messenger says, "What is your minimum investment size from an investor? Would you ever do a crowdcube venture to raise finance?" Um, well, the answer is yeah. It's something I've actually been thinking about a lot, which is, should we do some sort of equity crowdcube type thing? Just because it is true that in Europe, people do tend to kind of favor B2B or business to business applications more than B2C business to consumer applications, because business to consumer usually requires more capital. And it's something that's been done a lot more successfully in the US with companies like Google and Facebook and all those companies. And the companies that have done it well in Europe have tended to have to go to the US to really kind of crack it, like Skype and Spotify being 2 best examples. So, yeah, I think kind of crowdcube and equity crowdfunding are things that everyone should think about. At the beginning, probably they were not as well regarded, but I think now they're seen as kind of just as viable and useful as any other form of financing. Have you ever had, okay, so the results of the poll says, have you ever had trouble with accessing finance for your business? And I think 100% of the people clicked no. No one's ever had trouble accessing financing? Okay, I'm not really sure that I understand that. Maybe everyone is self-funded or everyone is bootstrapping, but I don't know. Usually, most entrepreneurs that I know at least kind of have, that's the number one difficulty in having a business, is just kind of figuring out how to pay your bills at the end of the month. And there are 2 ways of doing it. One is generating sufficient revenue, but that's difficult until you achieve product market fit, and it usually requires at the beginning some outlay of capital, or you have to go for venture. So congrats to all of you guys who don't need venture capital. Yeah. Okay. Then we have, I think, I think that's it. So that's all the time that we have for today. Gone through all the questions. So thank you for that. That kind of went by really quickly. Again, if you want to reach out to me, it's really simple. Just send me an email to GaryStew, GaryStew at gmail.com. Super happy to get as much feedback as possible about how we can improve the nest. And all I have to say left is, coming up on Ask the Expert tomorrow is Judith Dugdale, who heads up digital solutions from a large accountancy practice, MHA Moore and Smalley. And you can tune in from 8:30 to 9 a.m. to ask her your business questions. And from me, again, I think, this in this entrepreneurial community or the small business community, we're all in it together. So I just think that we have to support one another. And if there's ever anything I can do to support any of you, please just let me know. I think that we have about a couple of minutes left. So if there are any other questions, I might take one last one. And if not, I think that's it.